I'm just going to use Barbara's computer.
Okay, we're on. So, hi, good afternoon, everybody. This is
Oh,
Katie
Barbara.
from the Hartland Area Chamber of Commerce with our first Zoom at noon. So, thank you so much for tuning in to our webinar today. And we're going to be having our Zoom at noons every Tuesday and Thursday with area business leaders and business owners to talk about kind of what's going on with everything that we're, our stay home, stay safe, and what back to work looks like, and what they're experiencing in their business, and some of the expert advice that they have in their industry to share with area businesses. So today we have Dave and Barbara Walker with Hartland Insurance Agency. Thank you, David and Barbara, for joining us this morning.
Sure.
And we're trying to clean up some technical difficulties too as we get started. So we'll see if we can clean those up. So they're gonna share a computer, I guess, for now. So I know that we'll just kind of jump right on into it. Dave, did you, I'm really curious, just a quick question for you. Did you have something that you wanted to share with us today on the screen, or would you like me to pull up something and share? We can talk through it. It's up to you, or we can just have a conversation.
No, we're just gonna kind of talk through it is what we'll do, if
Okay,
that's okay.
perfect.
I didn't get anything prepared for you, so.
No, it's okay. It's
Okay.
okay. And I know you sent me the risk document. So if you
Yeah,
want me to pull that up and we could share that,
we
that
can
might be
do
good.
that one. We can do that one after we do the first portion, and
Perfect,
do it that
perfect.
way.
That will work out great because I
Sure.
thought that was really interesting, and I think it's really good information for businesses. So, um, so the new auto law coming up in July. I
Yeah.
know that's our topic for today. I'm going to just kind of turn it over to you and let you run with it. I am going to encourage folks that are listening, if they have questions, they can type in on the Q&A. And if we get some questions, we can kind of make this fluid,
Sure.
and I can sort of facilitate the Q&A, which I found with these webinars works out really good because it makes it more interactive. So I'm going to let you take it away, you guys.
Okay, sure.
Thank you.
So, as many of you know, there was a no-fault reform package that was passed last summer that effectively, there are a couple of things that have already changed, but the real bulk of all the changes to the no-fault auto law take effect on July 2nd of 2020 this year. Now, most of the time, the focus that you've seen on this has been on the private passenger auto or the personal auto policies that you all buy. That was really the focus of the legislation, frankly, was really on private passenger autos and personal auto policies, and not really on commercial auto policies. But having said that, from my side of the building, because I'm primarily in the commercial line side of the building, there were things that will affect the commercial auto policies as well, and that's what I wanted to focus on during this lunch and learner. What are the things that are going to change relative to commercial auto insurance? Now, it's not quite as sweeping, it's not quite as broad as it was on the private passenger auto side, but there are some things that will change in your commercial auto policies, and there will also be some decisions that you'll have to make that are very different than what your decisions are that you're forced to make or you'll be looking at making on the private passenger side or the personal auto policy side. So, among the very simple ones are the fact that liability limits, the statutory minimum for liability limits are going to change. Now, it changes with commercial auto as well. The only difference with commercial auto is that the vast majority of the time, most commercial auto policies are well in excess of what the new mandatory minimums are, primarily because, number one, they generally speaking are required to because of other contractual obligations. That is to say, a lot of times you will enter into a contract with a company and they'll say, in order to work for us, the specifications say you have to maintain the following limits of liability. And by and large, for example, when you're complying with those requirements, one of those is business auto or commercial auto liability. And usually the minimum I've ever seen anybody require for commercial auto is $1 million, which is well in excess of the mandatory underlying of 250 each person and 500,000 each occurrence. So for commercial autos, that will be less of an effect. Now, having said that, For those of you who do have a commercial auto policy that is less than the mandatory minimum, you do have the option to go down to by signing off and going down to the mandatory lower minimum of under the 250, 500. You can still do that on a commercial auto policy. That portion doesn't change. But for most commercial auto policies, when they renew after July 2nd, they're going to be up to the mandatory minimum limit. And that's actually for most of those mandatory minimums, because most of those commercial auto policies are written on a combined single limit for both bodily injury and property damage, as opposed to the way a lot of private passenger auto policies are written on a per person, per occurrence for bodily injury, and then a separate limit for property damage. They will all move, most of them will move to $510,000 if they're under the mandatory minimum. Like I said, that one is kind of a non-issue, because within the commercial industry, generally speaking, if you're going to comply with contractual agreements that you've got, you're already well in excess of any of the mandatory minimums. But that is one of the universal changes that does apply to both commercial auto and to private passenger auto. Okay. Now, the other one that is universal that changes both for commercial auto and for private passenger auto is the issue of mini tort. Okay, and so one of the things that will change on July 2nd is the mini tort will go from, right now, if you have a vehicle that does not have any physical damage insurance and you're involved in a collision, right now the most you can collect for that vehicle, or the deductible that you're trying to collect, is $1,000. Okay, so if you have a $1,000 deductible and or you have no collision coverage on that vehicle, right now the most you can collect under mini tort is $1,000. Now, effective on July 2nd, though, that moves from $1,000 to $3,000. And so by virtue of that, then if you have a vehicle that does have no collision coverage on it and you are not at fault in that accident, you can seek recovery for up to $3,000 after that. So you will see an increase in premium on the mini tort coverage on all policies, by the way. But that's a fairly nominal change. It's not going to be a huge sweeping change. The other thing that's changed, that's part of that's kind of swept up in that mini tort change, is something called the MACP assessment, not the MCCA assessment. We'll talk about that in a minute. But the MACP, which is the Michigan Assisted Claims program, this is for people that cannot get coverage anyplace else. And this is really more on the personal or on the private passenger side or the personal auto side. That assessment actually is going to go up from $16 to $30 a year as a statutory requirement. Okay. Now, the one thing that also does not change, if an insurance carrier increases your limits on the liability to the mandatory minimum limits, then what happens is that does not automatically change your underinsured or your uninsured motorist liability coverage. So in a lot of cases, you will want to maintain the same limits for uninsured and underinsured motorist bodily injury. Those, they're statutorily not allowed to just automatically increase those. You'll have to do those manually. You will have to make the decision as to whether you do or do not want to increase the uninsured and the underinsured motorist on your commercial auto policy. Okay. But those are fairly universal both for private passenger and for commercial auto. Where it gets a little strange on commercial auto versus private passenger or personal auto policies is when we get into the PIP, or the personal injury protection section, which is the one you've all heard about probably the most, where you've talked about you're going to have to make decisions relative to historically in the state of Michigan. Just to give you the history or the background on that. Historically, we have had under personal injury protection, you have unlimited medical and unlimited wage continuation. Wage continuation is limited by a mandatory number of years, but you had no dollar threshold. So any injuries that were sustained that were as a result of an auto accident from the med portion have all been paid for by Michigan no-fault coverage. Well, that's a very expensive plan to maintain, and that was one of the complaints. And was that simply it was a very expensive model to maintain. Now, you could also make the argument that simply put, if you were going to get hurt anywhere in the United States, you'd want to do it in a car in Michigan. because your medical benefits then are paid for the rest of your life if it's as a result of that auto accident. And so, but that came at a very expensive price. And that was the pushback or the concern that you were hearing from consumers. Now, the solution that was put into place was that you do have the option now of still maintaining the unlimited. If you choose to as a consumer, this one is universal both for commercial and for private passenger auto, you can maintain the unlimited coverage, or you can choose to buy a lower step down number of a maximum dollar threshold of either $500,000 or $250,000. Now, that's where it will stop for commercial lines for most people. In private passenger autos, they have the option to go lower if they have Medicare or Medicaid and they want to opt out. They can go down to 50,000, they can go to much lower numbers, but unless you're a sole proprietorship, under a commercial auto policy, the lowest you can go is $250,000 on the PIP limits that are offered. So you don't have those options like you do, the flexibility that you would if you're on the private passenger auto or the personal auto policies if you're Medicare, Medicaid. That's only applicable. So the only way you can go below that 250,000 threshold for commercial autos is if you are a sole proprietorship, and then you can go down. So if you're an LLC or a corporation, which many or most of you probably are, the lowest threshold you can get on the limits for personal injury protection are $250,000. Now, where it gets very strange and where it becomes more problematic for the commercial auto versus the private passenger or the personal auto policies, it is the issue of workers' compensation. You see, because the one thing that when they passed this law that they really did not talk about is what's the impact of workers' compensation. Now, always remember that in the state of Michigan, workers' compensation will always be, I can't repeat this enough, will always be primary in a loss that relates to you being injured as an employee out of and in the course of your employment. So when we look at PIP from a commercial auto standpoint, PIP, it really becomes the secondary coverage, not the primary coverage, if I'm injured and it's out of in the course of my employment, even if it's in a car accident. So if I'm involved in a car accident and I'm hurt and it's a result of my work, it's out of and in the course of employment, workers' compensation becomes primary, and then the PIP portion of the commercial auto policy becomes excess or above whatever workers' compensation doesn't pay. Now, historically, those two lines of coverage never matched up equally on benefits, right? And by the way, they still don't. And so the interesting aspect to that is that if you're involved in a work-related auto accident, you should be, and we always have done it here, you should be filing two claims. If you've got an injured employee, you would file both a workers' compensation claim, and those benefits then are paid up to its maximum. And then you would also file a PIP claim or a personal injury protection claim under the commercial auto policy that would then fill in some of the gaps that actually aren't covered by workers' compensation. So by way of example, in the past, the benefits for PIP on wage continuation have been slightly higher than those that are provided under the workers' compensation. So workers' compensation would pay up to its maximum amount, and then PIP would stack on top of that and pay its portion proportionally over the top of what workers' compensation paid. Well, those rules still apply. That doesn't change. So where on the private passenger or the personal auto policies, where you're going to be having to make a lot of decisions about your health insurance and coordination and what limits do I buy and do I want unlimited and do all those types of things. Well, on commercial auto, workers' compensation still remains primary. Work comp is still, if that's the first source, if you're injured in a car accident, that is the first source that you go to relative to, and it's an auto-related, work-related loss. Work comp is still primary. So that order of priority from that standpoint really doesn't change for us, okay? So that effectively stays the same. But bear in mind, the lowest amount that you can go to on the PIP limit offer is $250 on a commercial auto policy.
Hey,
Now,
David, we have a
yeah,
question
sure.
coming in when you were talking about that limit,
Sure.
the 250,000. Dale Lockwood asked a question to all the panelists, and he wants to know, should they stay with the lower amount and do an umbrella to cover a much larger payout?
Sure. Well, we were just about to get into the larger payout issue, but here's the other issue that you've got. Most of the time, the problem that you'll have on my side of the building, the commercial side of the building, it's a little different. It's a little bit like cats and dogs for compliance for underlying limits in the private passenger or the personal line side of our building. But on the commercial line side of the building, you won't be able to go down to the 250, 500, or the 250 combined single limit, only because typically the mandatory minimum underlying limits requirements for a commercial umbrella will be usually a minimum of 500,000. So my point being is, for example, if today you have a commercial umbrella with a limit of $1 million, 5 million, 10 million, it's got what's referred to as a minimum underlying limit schedule that's attached to it. And what that underlying limit schedule is saying is that before the umbrella steps in, before the umbrella provides coverage, you have to have at least this amount of underlying auto coverage, right, to comply with the umbrella requirement. And then you have to exhaust that underlying requirement before the umbrella steps in to provide coverage above. For practically every carrier that we represent, the minimum is actually what you have to have for the minimum for the state. So you'll still be nothing will change for you effectively because you're still maintaining 500,000. And in most cases, we have $1 million primary on the auto, and then the umbrella stacks over the top of it. So most of the time, it's not going to be driven by the statute that will say, I want a lower limit and buy a bigger umbrella. The greater issue will be the fact that the underlying limits requirement for that umbrella policy are going to be at or in excess of what the underlying requirements are for the umbrella policy. Hope that makes sense. So, but on personal lines, it's all different. Personal lines, it's very different. They have lower underlying limit schedules. And by the way, that varies widely from carrier to carrier. While candidly in the commercial side of the industry, that 500,000 minimum is pretty standard throughout the industry. In some cases, it's higher than that, depending on the industry classification. But generally speaking, on the commercial line side, you're already at that before you can qualify for the umbrella in the first place. Very different on the personal line side of it. Theirs are all over the place. Okay. Now, you do raise an interesting question, which is one of those that will change. You will see reduction in premiums, by the way. Really driven by two things. Number one, you probably won't see much of a change if you change to unlimited, if you retain the unlimited. You will see step down decreases in the personal injury protection if you take the 500 or the 250 in PIP or personal injury protection. So you will see a decrease in premium in that one portion of the policy. The other one that's universal that does apply to commercial autos and private passenger autos is what's called the Michigan Catastrophic Claims Association, or also referred to, it's got two different titles, but effectively saying the same thing. You have the Michigan Catastrophic Claims Assessment that's part of the Michigan Catastrophic Claims Association. And we tend to use the same, basically the same designator for those when we say MCCA, but we're saying essentially the same thing. Now, for commercial auto, it will also go down. Right now, the assessment is $220 annually. And then starting as of July 2nd, that will drop down to $100. So you'll go from $220 to $100. So you'll instantaneously say that. Now, you will only garner that benefit at the renewal. Okay, so if you renewed on, by way of example, June 29th, you will not get that reduction on MCCA charge until June 29th of 2021. So we will see some activity relative to cancels and canceling those commercial auto policies and rewriting them after July 2nd because they want to take advantage of that reduction. Now, it all depends on how much hassle factor you want, right? And also depends on the amount. If you have two commercial autos, you're talking about saving, in this case, $240. That may be worth it for you. It may not be worth for you. It's going to be really a decision that you're going to have to make. The biggest challenge for this is the timing couldn't be worse for me on the commercial line side, because the vast majority of my business for commercial, heavy commercial, the bigger commercial, especially big commercial fleets, all run on a calendar year basis, of January 1 to December 31. Well, okay, for $240, you may say, Dave, it's not worth the hassle, or yeah, let's go ahead and we'll just wait till the renewal in October. It's all going to become kind of a timing issue. If I get a commercial fleet with 75 units on it, and you start multiplying 75 units times $120, we're talking about some serious dollars. And they may want to make the decision that we want to rewrite effective July 2nd, and then we will rewrite again on January 1, so we get back on our calendar year basis. It's one of those where you're going to have to talk individually with your agent about each one of those, right? So it's really going to be that decision that you're going to have to make in terms of deciding whether or not the $120 per vehicle is worth it for you, or if you want to wait. It's really going to be having those individual conversations with your agent or one of the agents in our offices to have that conversation with them. Now, he did ask a really good question about umbrella coverage and about liability, because one of the things that this law did change that historically was not available to consumers but now will be allowable to consumers is the fact that in the past, when you had unlimited medical and wage continuation and vocational and physical rehabilitation that we talked about earlier, then you were not allowed by Michigan law. You were statutorily barred from seeking recovery for those types of damages under Michigan's tort, because you were collecting 100% of those expenses right from your own auto policy. That changes now. And so now after July 2nd, if you have somebody who has opted to only buy, say, 250 or 500,000, and they exhaust that 250,000 or that 500,000, then all of those allowable expenses that in the past you were not able to litigate for, now consumers, when they exceed that limit of 250, 500, the named peril or the named dollar amount limit, once they exceed that dollar amount, they now can sue you for the benefits that exceed that amount. So in the past, where somebody might incur, I mean, I can give you examples of having personal injury protection losses for the length of time we've been in business, you know, well into $3, $4, and $5 million, right? Now, if they're capped at $250,000 or $500,000, when they hit that $500,000 threshold or that $250,000 threshold, they can now sue for everything above the exhausted limit. And so where in the past you were really saved by, you know, as consumers, we were saved by the fact that it had unlimited, because it really, you know, your liability was limited to essentially three things under Michigan law. You could sue in the event of a fatality. So if my negligence caused somebody to be killed, they could sue me. If I had permanent disfigurement or partial disfigurement, scarring, those types of things, I could sue for those damages because those were outside of the allowable expense under personal injury protection. Or if I had either a partial or a permanent bodily impairment, I now have a limp or something like that, I could file suit for those types of damages. But for all the medical expenses and all the wage continuation and all the physical rehabilitation and all the vocational rehabilitation, you could not sue for those damages because they were all paid for under your auto policy. Well, now all those things that you were saved from being sued for under the old law, you now can be sued for. So one of the things you will see is one, which is not going to make you wildly enthusiastic about this change, by the way, is that while you will see a reduction in your personal injury protection premiums, the statute allows for, and what we don't know is what this will be what the long-term effect. I have an opinion, which I'll voice in a moment. But you will see your liability premiums increase slightly, right? Because a lot of these allowable expenses that you just got savings for on the personal injury protection by opting to say take 250 or 500,000, other people throughout the state now can sue you for. So you will see your bodily injury premiums go up a little bit. So there was an allowance within the law that said you can take a modest increase in liability. But what we don't know yet, obviously, is what the impact of that will be long-term on liability claims. Now, this is going to be opinion. This is not statute at this point. This is Dave's opinion. I think the long-term effect of this is that you have effectively just changed adversaries. And 7 years from now, you're going to be looking for tort reform to limit the amount that you can recover for liability like that. Think of it this way. The fact that we changed the law on July the 2nd of 2020 does not change the number of accidents that are occurring in the state of Michigan. It does not change the severity of those accidents in the state of Michigan. It does not change the economic impact of those accidents in the state of Michigan. The only thing that it effectively changes are the funding mechanisms, if you're with me, right? And so even though we still will have the same number of car accidents, we'll have the same number of injuries, and the severity and the economic impact of those injuries will still be just as severe as they were on June 29th. You have now changed the funding mechanism so that only a certain portion of it will be paid by your auto policy, and the rest now you may have to litigate against, to litigate to try to secure. That will not necessarily reduce the cost long term, but could potentially increase the cost. And so what you're saving, in my opinion, what we're saving in personal injury protection, we now may be swapping out for bodily injury premiums in the next 5 to 7 to 10 years. So that's kind of Dave's opinion on the trade. It's a little bit of a Faustian deal. You are going to get some instant gratification, right? And the instant gratification is going to come in the form of lower Michigan catastrophic claims assessment and some reduction in your PIP premiums. You're going to see some modest increases in the bodily injury and in the mini tort coverage that you buy. And your net effect will not be nearly as exciting as you might have been led to believe. One of the roles that we've been playing in doing this has been trying to set what I would call reasonable expectations for consumers as to what the real impact of the law is. You have heard numerous times of percentages in the 20 and 30 and 35% range. Well, that's true, but it's only for the line of coverage that is affected by it, which is personal injury protection. Not the whole policy is not going to see that. So by way of example, nothing I've talked to you about now talks anything about physical damage or the comprehensive or collision coverage on your vehicles. That doesn't change. That hasn't changed. That component, by the way, will remain relatively unchanged by this law. The property protection insurance, or what's called PPI, or it's a property damage form, doesn't change. It's not affected by this law in any form or fashion. So you're really only going to be affecting 3 portions of that auto policy when you look at it in a group. And those 3 sections are the residual bodily injury liability coverage, the mini tort coverage, and then the personal injury protection. All the others will remain effectively the same. And so when we're saying the expectation should not be at 30%, if you want to use that number, they're really going to look more like 5, 7, or 10 or less than that will be the real direct impact on your dollars, right? So if you were paying $1,000 a year before, it's not going to go to 700. It's more likely that it will go to 925 or 950, or maybe the extreme of 900, but certainly not the extreme or the percentages that have been talked about, because those percentages are typically about the line of coverage that it's affected. And that kind of 30% anecdotal number that they're tossing out there is really only going to be applicable to the personal injury protection and not the rest of the policy. And in fact, we're going to be seeing increases in a couple of smaller components on the rest of your policy. So as you can see, the commercial line side of it is really less impacted, primarily because of the fact that workers' compensation is still always primary. That doesn't change. Mini tort will change. Your bodily injury rates will change. You will have to make decisions regarding PIP choice, whether you want to go to 250, 500. And in a lot of cases, you're making those decisions not so much for yourself, but you're also making those decisions for your employees, right? Because the people that would be impacted by making those decisions will be the employees of your organization, to be able to collect from the excess of the workers' compensation, or that stuff that isn't covered by work comp that's picked up in the PIP portion of the policy. So that's kind of very much a Cliff's Notes. If anybody, we're not even talking about things like motorcycles and the other aspects of this. Now, the last component that I will tell you that is also a little concerning to me, that we don't know what the net effect of, is that we're going from something called a modified comparative negligence standard to a pure comparative negligence standard. And in the past in Michigan, in order for you to qualify to sue, they had when you were involved in an accident, they would ask you questions. You'd look at the police report, and they would determine what the percentage of fault was between the parties, right? And you were not allowed to litigate if you were 51% or more at fault, right? So if you were 51% or more at fault, you pretty much had lost your ability to file suit in the state of Michigan for any other damage as a result of that auto accident. Under a pure comparative negligence, and we don't have the time or the scope in the time that we've got today to walk through it, but if anybody wants to call or talk to me or anybody from our office to talk about this, now what happens is your liability limits could be attached even though you were not the majority at fault. So it's a crazy change in the law, but we are going to be going to a pure comparative negligence standpoint, and that includes all those people that might be attempting to litigate for allowable expenses that are above the 250 or the 500 that they may have opted for. My point is, it's going to put your liability limits at greater risk, not just because of the allowable expenses that they can sue, but because we're also changing the negligence standard for that litigation that's going to have an impact on how much liability coverage you should be maintaining. Our position is buy as much as you can, and then you feel reasonably affordable. And we are going to be talking to people. Really, we've been talking to them about them for the last year, but even more so about buying more umbrella coverage to pick up that gap above the liability exposure that they've got in the auto. Okay.
How'd you move into the COVID? Because that's only time for the risk paper.
Oh, okay. Now, we also have a document, and Katie, if you want to go ahead and put that document up regarding the COVID-19.
Sure. Does anyone have any questions at this time in regards to all the information David just covered? It's kind of quiet out there.
That means I either did a really good job or a really bad job. I could go either way. There's a big wide span with that. So
you talked about a little bit about people may choose a course of action in suing once they hit that maximum coverage, maximum, the liability. Do you anticipate a lot more lawsuits happening in the future?
Yes.
Yeah, I would think so.
Yeah, I mean, in the past, unless you've met one of those three criteria of a fatality, disfigurement, or disfigurement, or loss of use, loss of mobility, we don't get sued, right? Simply because all those other expenses, allowable expenses, were all paid for by everybody else, your own auto policy, right? And now, because of the carrot that's out there of reducing my cost by buying 250 or 500, I suspect, while I'm not going to do it, there will be a lot of people that will take advantage of that 250 or 500. And like I said earlier, changing the law does not change the number of car accidents, doesn't change the economic severity, and it doesn't change the fact that now they can go ahead and sue for those amounts that are in excess of that. So the answer is, yeah, I feel reasonably comfortable in predicting that, yeah, we will see more litigation. And by the way, here's the catch. The litigation will be much more severe. What I mean by that is, I think about an injury that you get and you're hurt and you expend $100,000, $200,000 in medical, you're still well below the 250, right? The lawsuits that we will have that will be triggered will be bigger, right? Will be much larger, simply because that type of loss is going to be much more catastrophic on the economic impact side of it. So I think the other aspect that a lot of people aren't thinking about it is not just the amount of litigation or the greater number, but also the fact that the types of claims will be much bigger. The dollar amounts are going to be in play, in my opinion, will be much bigger. Yeah.
No. Thank you, David.
Sure.
We have another question that came in before we move on to the risk insight. Jacob asked, does the pure comparative negligence standard go into place on July 2nd, the same as the other changes that you mentioned?
Yes, that is part of the change of the July 2nd of 2020 rule. Yep.
Okay, perfect. All right, thanks. So I can go ahead.
The only thing, Katie, the only other kind of weird thing that somebody might ask that does trigger, there are a couple of other sunrise provisions within this law. And one of those that is done that's expected to help reduce cost is the fee schedule. Now, the fee schedule relative to what the healthcare providers can charge, that does not take effect till July of 2021. So that's got a year lag behind it, so that doesn't take effect till July of 2021.
Okay, perfect. Thank you.
Having
So if
said
there's,
that, given what's happening with hospitals right now in COVID-19, that's assuming that you have any hospitals that are still not in bankruptcy that you can actually go to seek repair for. So, okay.
all right, thank you. If there's no more questions about the law change, I can pull up this document, so I'll go ahead and share my screen and you can guide me through, unless you want to pull it up on your screen. Do you want me to do it?
You can go ahead and do it.
Okay, all right.
Because I can't. Just to be clear, that's fine.
I appreciate the honesty. All right, I'm gonna grab this, and can you see that?
So, and by the way, we'll make this available to any chamberman, anybody who wants this. Just if you want to email me or contact the office, we'll be glad to share this with them. Anybody?
Yeah.
Or if Katie, if you just want to send it out to the attendees, that's fine.
Yeah, I can do that. And if everyone gets our newsletter, we've been trying to do a newsletter, like a weekly update every Monday. And then I actually sent this out in yesterday's news, but I'd be happy to send it out to the attendees today as well, so they have a copy. This is good stuff, David. Thank you.
Sure. So the idea behind this document is this is just to kind of give you some insights and some protocols, and then understanding what your risks are if we now go to the point that we're going to start reopening for business. Now, understand that, you know, obviously a lot of this is going to be driven by state and local government that's going to drive, you know, the timing, what can be open, what are the parameters for being open. I mean, you know, there's no way of handicapping the fact that we all know that the rules are being written even as we progress through this, right? I mean, think about the PPP loans and the EIDL loans. Look, they're still writing the rules for this stuff, right? So I mean, this is going to be very much a work in progress. I think, you know, once the government allows, I think one of the things that consumers will have an expectation, and so will employees, will be, what are you doing to protect me so that I don't have any issues regarding COVID-19? I think one of the greater underlying concerns behind this is the fact that I think people are, while we're genuinely concerned about the economic impact that it's having right now, while we're certainly concerned about the health and the safety and the well-being of people right now, I think the other one that everybody quietly doesn't want to talk about, but you have to talk about a little bit, is they're concerned about this being a boomerang virus and suddenly coming back in with a vengeance in the fall, in the winter, coupled up with what we would call the traditional flu. And I think there's enough concern about that people are worried about this. So one of the things you have to look at is, what are the protocols and what do you want to do in terms of assessing what we need to provide. Now, this document kind of walks you through kind of an understanding of what those risks are, protecting both employees and customers. You know, if you would flip down to the next page, if you would. One of these is kind of looking at the hazards, and I think this will vary depending on the type of business that you operate, right? You know, for the construction industry, it's very different than it will be for restaurants, and there's not a universal answer for this. I'm sorry, Katie, can you go back up to page 2? Thank you. So identifying what those hazards are and where you've got people that you know will be congregating together and where they're going to be talking in all those kind of high risk areas, you know, that every business has. You've got to identify what those hazards are and what can we do then, put it in preventative devices or preventative solutions to make those go away. I think you've also got to consider how and who can be harmed. Obviously, there's no question that when we look at the statistics, that by and large, it's the elderly that have got the greatest amount of impact as a result of this. And so, you know, who can be harmed and what can you do? Do you have high-risk individuals? Do you have high-risk staff? So, you know, by way of example, when we say that there isn't going to be a universal solution to this, if you're operating a construction company or you're building residential or commercial buildings versus somebody who's running an assisted living facility, the people who can be harmed and the stakeholders in your decisions on how to control the risk, how to clean, all those types of things is going to be wildly different between those two types of operations. And then you also have to assess, the likelihood and the ramifications of what will happen if they occur. Now, I'm pretty sure that in a lot of cases, you're going to have companies that are going to be going above and beyond what may be actually necessary, because I think consumers have an expectation, whether this is right or wrong, whether it's justified or not, whether it's rational or not, are two different conversations. But you will have consumers out there that will have an expectation that will say, you have done things, right? You as the business owner will have done things or put in place protocols that will protect me as a consumer coming into your location, right? So that is to say, there's an expectation that it has been cleaned, right? Now, regardless of whether that's a rational, always bear in mind that this is regardless of whether that's a rational concern or not, because we've all read the articles ad nauseum that say that the shelf life of this virus is relatively ephemeral. It doesn't last very long, but you still are going to have an expectation that they have cleaned and they've disinfected. And the other problem that you've got is just because it sat dormant for 2 weeks, 4 weeks, 6 weeks, whatever that time window happens to be, as soon as somebody walks by who is positive or walks through that, well, you've just recontaminated it. So the fact is you've got to be able to assess what all those are going to look like. And it's all going to be about this issue of avoidance, control, and transfer, and how do we make sure that everybody's protected. Monitoring the results is going to be a challenge. I think, one of the things that I think is going to change and how we do business are the protocols for meetings, and I think you're going to see more and more of a change. The concept of shaking hands may change. The concept of space in restaurants may change. These are all things that are going to have to change over time. Obviously, when we look at this from the standpoint of OSHA and CDC guidelines, they're going to be looking at the threats that are out there and the potential impacts on those, and what are the administrative controls that can be put in place. We would scroll up a little bit, Katie, then. Keep going. I'm sorry, down. I meant down. Going into page 3.
That's what I thought.
Yeah,
there you
sorry.
go.
Yeah, and so one of the things that we're going to see that may not have ever been a part of your business, this may not have ever been a practice of your business, is the utilization of PPE. Now, what that looks like in terms of equipment, people tend to think of it in the fairly sterile hospital type environment of masks and the big outfits that you've seen caregivers wearing on TV. Look, it could be as simple as, for example, if you're a retail establishment, you may be seeing, and while you've seen this in the past for other reasons, you may now see plexiglass screens going up in front of cash registers and places like that. And while historically you've seen those because they were concerned about another type of violent act or something like that, that type of equipment, I think you're going to see more and more just as to shield employees and to shield consumers from employees that are going to be put in place. If I had a retail establishment, it would not surprise me. If I owned a gas station, party store, something like that, I had a conversation with a retail establishment that we insure earlier this week, and he said, yeah, while we are closed, I am already in the process of fabricating plastic shields that will go in front of each one of our stations for checkouts. So you're going to see more and more of that. So it's going to take a different dynamic than just masks and shields and clothing. You're going to see lots of others, okay? The other thing is you're going to see probably a focus on your environment, right? And so this talks about the installing high efficiency air filters, ventilation, installing physical barriers, right? So a lot of times when you go into places of business that are allowed to be open now, they are kind of cobbling together spacing, right? So, by way of example, I went and bought some things at a store the other day, and when I went there, they had tables, and the table stood in front of the counter so that it forced you to distance. You couldn't walk up to the counter. Well, I think you're going to see more and more of that, and you're going to see more and more square footage taken up from that. And you'll also see more conversation, all those types of things. The other thing is you will see, I think, in my opinion, a heightened awareness. So when it talks about separating sick employees, you're going to see people saying, hey, if you're sick, I don't want to take the chance. I don't know if it's COVID-19. I don't know if it's a flu. I don't know what you've got, but you're going to have to be sequestered over here for a period of time. And we're going to take you off the grid for a while. What's interesting about that is that, in a lot of cases, for a lot of businesses, ours included, by the way, when we looked at our model for working away, so when we were saying we were going to work from home, that type of model was really premised in a lot of cases, and I think a lot of businesses this was true. Most of the work at home technology was premised on a weather event that would put you out of your office for, say, 2 to 5 days, right? So think of a blizzard that comes into town and you can't get into your office for 2 to 5 days. Most of the time when you're thinking of working remotely, you are not thinking of working remotely, or your staff or any of your customers, you weren't thinking about the concept of working remotely for 6 to 8 weeks unless that was your business model. You were thinking of a weather event or some other catastrophe for 2 to 5 days that you just couldn't get access to your building, or you couldn't get on the roads and you couldn't get out of your house. This dynamic changes this all very much. And so now we're looking at it from the perspective of not 2 to 5 days, 6 weeks, 8 weeks, whatever that time window happens to be. And you now start to assess the fragility and also the dynamics of how you do business in a very different environment than what you did before, okay? So you'll be looking at all of those types of risk levels. Like I said earlier, I think one of the things you'll see in this document is this whole issue of social or personal distancing, I think, is going to become the rigor. You're going to see more and more of this day in and day out. And then also, the other last part of this is I think you're going to see a heightened awareness of what they would consider respiratory etiquette, hand hygiene. I mean, I've washed my hands so many times that I'm pretty sure all the crib notes from my history class in the 10th grade have now finally come through, and I could take that test again. But you're going to see a heightened awareness. I think once again, when we talk about PPE, you're going to see more and more soap. You're going to see, meaning in workstations and places like that, you're going to see more and more of those types of things that are going to be in place. And I think the other thing that you're going to see is, especially if you're in this business, it's fine, you're going to see a heightened level of cleaning, right? So where places might have done routine cleanings and routine disinfections, if they did any disinfecting at all, once a week, I think consumers and employees are going to anticipate that once a week, I'm not really comfortable with. Can that be 2 times a week or 3 times a week or something greater? Now, that will vary widely but on the industry. So for example, in the restaurant industry, that type of cleanliness is mandatory, right? The local Department of Health is going to require that. But in a lot of businesses, that's never been the rigor. I mean, we have an office and we don't have a regulatory agency like the Department of Health for restaurants that comes in and says, you have to do the following cleaning on a regular basis. I think there will be an expectation that will begin now to grow greater and greater on an ongoing basis. So I think that's going to be some of the factors, but these are just some ideas and some insights that you can certainly use to look at in terms of what I think, if you ask me out of those 4 pages, the things we think are going to be the long-term net effect of what we're going through right now. So that's pretty much all I have. Katie, do you have any other questions? Did you have something? Okay.
Sorry.
Good. So that's pretty much it.
Well, thank you so much.
Like I say, if you do have questions, insurance questions, always feel free to call on us at any time. We're always glad to answer those questions. We like trying to educate the public. That's part of what we think we do, is not only just provide coverage and and rates and all those types of things, but we also like trying to have informed consumers. We like people to know what they're buying and why they're buying it and why they're making that decision.
Thank you, David. Someone mentioned that your hand washing joke was funny, so thank you.
Well, you don't get many jokes out of this kind of stuff, so hey.
Yeah, and you are definitely one to make us laugh during something like this, so thank you for the humor. Getting a lot of thank yous for your knowledge. I do have to thank you. I mean, you guys are really good. You and Barbara both, and your company and your employees. You guys are great supporters of our community and other businesses. And for you just to carve out the hour today to spend sharing your expertise and your knowledge and some of the homework that you've done really is. I can't thank you enough. So we appreciate it. And I know you touched a little bit on kind of our future. Going forward with how we're going to go about doing business. And so that kind of leads me into, some of you may have gotten the information already, but we are launching kind of a county-wide webinar series talking about what does getting back to work look like. And our speakers will be experts from the health department, the human resource industry, and fire and safety. So all of this is going to be important as we take the necessary precautions and steps to whatever. I know everyone, that buzzword, the new normal, but that's the only word I can think of. So I appreciate you touching base on that. So keep a lookout for more. Our next Zoom at noon is Tuesday, and we'll have Kevin Brennan from Michigan Financial Planning talking about the market and how it affects us during these times. And on the 30th, we'll have our township supervisor, Bill Fountain, is joining us. So make sure you go on our website, register, and tune in. And thanks, David and Barbara, again for coming on. And we'll throw this video up on YouTube for those that missed it too. So if anyone has any last comments, I think we'll sign off.
Okay, thanks. Thanks for having us. We're glad
Yeah,
to do it.
thank you so much. All right, everyone have a great day, and chin up.
What was I couldn't read what it said.
Pull up the